Tom, we've talked about year-end melt-up. Now we're hearing more about mid-December in terms of seasonality, getting some last-minute strength. But you do acknowledge that your target is now a tougher call.
Yes. Good morning, Carl. It absolutely is. The S&P lost 200 points in the last 10 days. It's down 5%. So from 4,500 to 4,800 is a huge move, and it's a big ask. But I think given how much cash has been raised on the sidelines because of investor panic around the Fed and Omicron, I think it's still in place. So I would say our base case is still we exit 2021 above S&P 500, 4,800.
Interesting. Do you think you need to have things like the VIX go back to somewhere in the low 20s before people sense an all clear? Or do you think bets are going to get made in advance of that?
That's a great question. We highlighted in our note this morning that, like when you look at prime brokerage data and investor gross leverage is at the lowest levels all year. And if you look at money market funds, institutional investors raised cash 5-6 consecutive weeks at the highest cash balance all of 2021. And so it looks like people panicked because of the Fed pivot and Omicron. And the VIX is another way people bought protection. So, Carl, the reality is like the VIX could easily make a move back into the mid-teens in a matter of weeks. That, I think, would be coincident with the rally starting. And I think, for instance, again, I'm not a scientist, but all the incoming anecdotes haven't shown Omicron to be more lethal. And the Fed's already made what looks like a hawkish pivot, and that's been almost immediately priced into credit. So, as you know, if things get less bad, that's good. So I kind of just still think what's in play in the next, between now and year end is actually a strong rally. It's just, of course, from a much lower level.
Tom, what do you make of investor sentiment overall here? And three things I would call out. The strong moves higher on Snowflake and Okta last week after earnings, or they're still lower, say, for the month. This rally that we're seeing today in names like IBM and Apple, and then NVIDIA and AMD, which have performed so well throughout the year, are lower by about 5%.
Yeah, John, part of the tech headwinds this year has been that they were just so good in 2020. And so many stocks got earnings growth and, strengthened their market position, even had pricing power, but then their PEs derated. I think that reverses in 2022. So to me, like big cap tech, the FANG complex, a lot of these high quality, large cap tech, especially leaders, I think are going to be the things people allocate to in 2022. And keep in mind, the 10-year now is at 1.3 something. They talk about Tina. You're paying, almost 70 times for a 30-year bond, a 10-year bond, actually. And so I think equities with its sub 20 PE is just still a great risk reward.